Hello, I'm giving you the chapter summaries of our course book titled Foreign Trade. This is the last chapter's summary. The title of the chapter is International Capital Movements. In the 8th chapter of our book, we are dealing with the international capital movements. So it's again the monetary side of our issue. Here is the chapter outline. The first title is about the balance of payments of a country. So we explain the balance of payments, the meaning of a balance of payments, its importance, and the accounts of the balance of payments. At the second title, we give the capital movements among nations. And at the third and the last title, we are analyzing the capital movements and financial crisis. So what is the balance of payments of a country? Balance of payments is an accounting system about the international transactions of a country. So any international transaction of a country has to be recorded under the balance of payments with the adequate accounting system. So what kind of international transactions we can give as examples? Of course, first of all, we should give international trade. Exporting and importing are international transactions, and they have to be recorded under the balance of payments and within the calendar year. Okay, balance of payments depends on the fundamental principle of double entry bookkeeping. As social scientists, we all know about accounting systems, I guess. So we know that each transaction requires double entry bookkeeping. So for the balance of payments accounting system, we use the same fundamental principle of double entry bookkeeping. In the balance of payments accounting, the value of incoming flows to and outgoing flows from the country are recorded by credit items and debit items. Credit items are measured with the positive sign. They refer to a transaction that represents a payment made to the home country by other countries. And on the other hand, debit items are measured with a negative sign. They refer to a transaction that represents a payment made to other countries by the home country. So what are the balance of payments accounts? There are 5 main accounts actually. And of course, under each main account, there are sub-accounts. These accounts, main accounts, are current account, capital account, financial account, reserve assets, and statistical discrepancy. So as I've told you before, under each of them there are sub-accounts which you can record any detailed type of international transaction. Well, what are the types of international capital movements? We have domestic and foreign capital movements. We have government and private capital movements. We have long and short-term capital movements. Well, There is a very close relationship between capital movements and financial crisis. And we witnessed, or we have witnessed, these close relationship in the last decade after the mortgage crisis of the US, and the world economy witnessed all the negative effects of these financial crisis. So although they have a variety of features, financial crises are often experienced as a banking crisis, a foreign exchange crisis, a debt crisis, or a combination of these three. In our book, we explain them in a very detailed manner. So let's talk a little bit about the vulnerability of a country. What are the determinants of the vulnerability of a country? Actually, the vulnerability of a country may arise from inconsistent and unsustainable monetary and fiscal policies, and volatility of foreign capital flows. So if both of them are present, then yes, we should easily conclude that such a country is quite vulnerable or quite open to probable financial crisis. Of course, this was a very brief summary of our chapter 8, a very broad explanation, and a lot of information can be found at the chapter. So I would like to again remind you that there are lots of materials which are produced for your disposal. So please refer to them while studying, and I'm sure that they, as a whole, will help you so much in succeeding. Well, I wish you all the success.